The JP Morgan Equity Premium Income ETF, known as ticker symbol JEPI, has been a very popular covered call style ETF for several years now. Now, this is because the ETF not only offers a diversified portfolio with a strategy in place to generate investors consistently higher than average dividends on a monthly basis, but also potentially offers the perfect investment vehicle for those looking to latch onto a high yield investment vehicle when it comes time to retire. Now, in this video, we're going to dig a little bit deeper into JEPI, explain what this ETF has to offer, and even share with you exactly how many shares of JEPI I have across all my portfolios. Then towards the end of the video, we are going to decide on whether or not the JP Morgan Equity Premium Income ETF, known as JEPI, is a good option to retire and live free and clear off your dividends. Now, if you personally own any shares of JEPI or have ever thought about it, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we dig a little bit deeper into JEPI, to be completely transparent across all my portfolios right now, I currently hold around 1,248 shares of JEPI at an average cost of around $52.84 per share. Now, these shares of JEPI were purchased over the last several years. I didn't buy all these shares of JEPI at one time, and although I haven't purchased any new shares of JEPI in quite some time, I have held on to every share more or less that I purchased since I started investing. Now, the main reason why I personally own well over 1,000 shares of JEPI as of right now is because JEPI does offer sort of a low beta option in the form of a covered call ETF that at least historically has generated quite a bit of yield. Although we're definitely going to touch on the elephant in the room and the fact that the JP Morgan Equity Premium Income ETF's dividends have been getting smaller and smaller, at least as of recently. But to look a little bit deeper into JEPI, here on the JP Morgan website, we can see that the overview says to seek consistent premium income with lower volatility, which is basically exactly what I was looking for years ago when building out my long-term portfolio. You see, throughout my long-term portfolio, I definitely want to have some positions within it that are going to have some more upside potential, but the majority of my portfolio, I'd be perfectly fine with making a slow and steady minimum 5 to maybe upwards of 10% return year after year. It then says the JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. Now, the way that JEPI does this is basically like any other covered call style ETF. You can see that right here, as far as the portfolio sits, there's around 132 holdings as of right now. And within these holdings, there's things like Meta, Amazon, etc., etc. But then within this basket of holdings, JEPI is also going to sell covered calls, which is going to help not only protect against downside exposure, but also help with generating income for the ETF, which is then paid in the form of dividends to investors. And speaking of dividends, when it comes to JEPI, I think it's important to dig a little bit deeper into this because a lot of investors, including myself, bought shares of JEPI initially. Let's be real here, because JEPI did, of course, offer a super high dividend yield compared to a lot of other ETFs and stocks out there. Now, historically speaking, looking back all the way till about mid-2020, JEPI was paying 49 cents per share per month as far as dividends go. The next month after that was 29 cents, then 45 cents from there. And then for a while, JEPI was paying around 40 cents, 30 cents, etc., etc. Now, the first thing to make very clear is that JEPI or any other covered call ETF across the board is not really going to have much dividend growth because it's just not really the way these ETFs work. They mostly pay a different amount of dividends on a monthly basis, and it really depends on how the overall portfolio trades and what happens with the options markets and volatility in the market during that time frame. Now, this right here is the volatility index, and as you can see, over the past year or so, volatility has been generally pretty low compared to like what we saw back in 2020. Now, when volatility is lower, options are going to be cheaper, which means premiums are going to be lower, which means a fund like JEPI is not going to earn as much premium by selling covered calls than it would during a time in the market where volatility is much, much higher and spiked up. And you can definitely see a correlation throughout JEPI's dividends historically, more or less. When volatility was a lot higher, JEPI was able to generate a lot more income for investors and pay them out in the form of dividends. But when volatility is lower, there's not all that much premium to be made, which means investors are going to get smaller dividends, which is just one of the unfortunate sides for those that hold covered call style ETFs like this one. But all in all, even though JEPI's dividends have been sort of all over the place and a little bit lower than what would be ideal over the last year time frame, JEPI still gave off a 7.97% trailing 12-month dividend yield, which of course isn't horrible, considering JEPI is up 3.21% in the 1-year time frame, which again for a covered call ETF isn't absolutely horrible like we've seen with some other covered call ETFs. So now that we talked about JEPI's dividend and how it's sort of been consistent and it really depends on volatility, and we explained exactly how that works, looking at JEPI's price performance, on the max time frame, JEPI is up 12.13%, and I say that with some optimism because again, a lot of these covered call style ETFs decay. Now, one obvious example of another cover call style ETF is TSLY, or the Yield Max Tesla Option Income Strategy, which as far as price return goes is down 56% on the max time frame. Another good example of a cover call ETF that's decayed quite a bit over the max time frame is QYLD, another super popular cover call style ETF that's been around for a little bit longer than JEPI, down almost 30% as far as the max time frame. So even though JEPI is only up 12.13% in the max time frame, considering how some of the other cover call ETFs have performed as far as price return goes, I honestly wouldn't consider this all that bad. Now, before we talk about if or if not, I think the JP Morgan Equity Premium Income ETF JEPI is a good investment option for those that want to retire off dividends. I thought it'd be fun to see how a $10,000 investment into JEPI would have performed over time. So if an investor bought $10,000 worth of JEPI, this was back in May 21st, 2020, let's say. JEPI was trading at around $50 per share, and since then, if every single dividend was reinvested during that time frame, that $10,000 would have turned into $15,600 and some change. Now that's a total return of 56.68%, or an average annual total return of 12.8%. Now let's be real here, over the same time frame, if an investor would have just invested into something like SPY or SCHD, or there's plenty of other ETFs out there that do have much lower starting yields, they probably would have made much more money off their initial investment. But even still, I think it's important to point out that for a cover call style ETF that has had sort of a rough patch over several different timeframes, JEPI's 12.8% average per year is not all that bad at all. Now lastly, let's talk a little bit about if this ETF is a good option for investors that are looking to retire off the dividend. Now, to go through a few different scenarios just to see how much money we would need to invest into something like JEPI, knowing how much JEPI pays in dividends, etc. Let's say an investor had around $4,000 in bills per month, and if JEPI paid on average around 38 cents per share per month, this investor in theory would need around 10,500 shares of JEPI, which currently costs around $56 per share. So this investor in theory would only need around $589,000 invest into JEPI to have all their bills covered. Now I say only because, of course, if an investor was to invest into something like SPY or SCHD or a lot of the other lower yield, higher growth ETFs, they would need a lot more invested in order to have the dividend cover all their bills and more, of course. So on paper, JEPI does seem like sort of a viable option for an investor to invest a relatively small amount of money into this ETF and earn enough income from the dividends to completely retire off it. But the one big problem that I personally have with the idea of using an investment vehicle like JEPI to invest a significant amount of money into it and then try to use the dividends to pay your bills and more. The problem is that the dividend is so variable and it changes so much consistently on a monthly basis that it's really hard to try to budget out exactly how much money you would need to invest into something like JEPI in order to have the dividends cover all your bills. Now this is of course because, let's say, JEPI pays a 57-cent dividend one month and then the next month pays a 30-cent dividend because volatility is lower and there just wasn't as much premium to be had. Now that's drastically going to change the amount of income an investor is going to receive on a monthly basis from the dividend, which could for sure mess things up when you're trying to use the dividends to cover all your bills. Now I guess the obvious solution to this would be for an investor to invest more than they would even need to be able to cover all their bills and get paid extra in dividends on months when the dividend is a little bit higher, or to just create a budget and use those higher dividends to save for the lower months. But either way, at least for me personally, this is just my opinion, I don't like to have too many different stocks or ETFs within my larger portfolio that pay a drastically different amount of dividends on a monthly basis. I like to have an idea on how much I'm going to earn consistently over time. Now that being said, I think that having some JEPI and some JEPQ, for example, or any other cover call ETFs as satellite positions throughout your portfolio is not a bad idea if you want to generate a little bit more income on a yearly basis. But now I want to hear from you guys down below when it comes to either JEPI or JEPQ. Do you have either or in your portfolio, and which one of these ETFs are you adding more of as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.